What is happening, everyone? Give me a second here. Make sure everything's kind of working. Futures Brizio, hope everybody's doing well, having a good night. It's about 8:30 uh, p.m. on Tuesday, July 21. Hope everybody's doing great. Had a great day. I did do another live stream around lunchtime today, so that is posted on the channel, and we're just going to kind of do the same thing. Not a lot has changed, obviously, in the last 8.5 hours so much, but we will endeavor to jump in. So if you do jump on the live stream, because I can't always see if there's comments or people in here when I'm looking at my streaming at the tab that I'm streaming, make sure you say hello, drop a comment, drop a like, subscribe to the channel, etc., etc., etc. All right, and we'll just jump right in here. Okay, so the one thing I wanted to talk about is, to me, the best use of these range charts in terms of setup. Okay, now you can of course trade these charts just the way you trade regular candlesticks, but what I particularly like about these, and I'm going to see if I can find a really good example, although they're all over the chart. Now this is one kind of. So that's dollar Swiss. We'll keep that one in mind. Okay, here's another one on Aussie yen. So what I really like about these charts are the fact that because these are range bars, they set up really nice, tight consolidation ranges in these sideways patterns, just like this one. Okay. Now, this range that was what, 6 candles long, right? One, this big wick, 2, 3, 4, 5, 6. This first candle formed on July 6th around 2 o'clock in the morning. Yuck. And it went until July 10th at about 2 o'clock in the morning. So this range right here lasted for 4 days. Okay. So even though it doesn't look like much, it's 4 days. Okay. So now if you were looking at this on a shorter time frame, even like a 4 hour time frame, this would be a lot more sloppy. Okay. And it wouldn't be as obvious. So this is what I really like about these range charts is if I look through my chart and I see something like this, I mean, I may or may not have a bias of what direction it's ultimately going to go in. But um, obviously, in this case, it ended up going up. And the fact is, it came up here and broke this old swing high. So after this new low was put in. So, but regardless of that, it doesn't even really matter. What I like to do is see these because this is showing me a very clear pause in the market. And whether it continues to go in that direction or whether it reverses remains to be seen. But what I will do in that case is I can just put like an alert just above these highs and just below these lows, set an alert. And then if I want, and obviously this candle right here was the breakout candle, you could have gone long right here at the close of this candle. But in addition to that, if you want an even better entry, what you could do is, because this is that same range. This is the 250 range chart. Okay. So this is the same range right here. Okay. And of course, you could just use this chart if you wanted, or you could just draw a box around here. What I like to do is identify it on the higher chart first because it's a little more obvious to me. These, all these kind of equally sized, very obvious, as opposed to this, which is a little bit more sloppy. But the point is in order to get maybe a little bit sniper entry more, you could have gone long on this candle right here or on this one right here. And if you look now, I'm pointing here on the chart on the right, but if you look over on the left, it syncs up my crosshair tool. And that basically means you could have gotten an entry about halfway up this candle and gotten even better entry. So you could just enter straight away on this candle, wouldn't be as good of a fill, or you can drop to a shorter range, in this case, the 250. You get a little bit more detail, and then you could get in on this candle or this one. Okay. And this one closes above this one here for sure, because this one right here closes above all these wicks. This one doesn't, but it does close outside the range, which is pretty good. Okay. So that is the Aussie yen. So this is becoming my kind of preferred view on this, is looking at this. Now, I was talking today, there was another one here. I think it was on Aussie New Zealand that was maybe setting up for something like that. So let's go to Aussie New Zealand and let's see. Oh yeah, okay. So it is Aussie New Zealand. So you see on Aussie New Zealand, and you can see I already have the alert set. We've got this right here. Okay. We've got 1, 2, 3, again, 1, 2, 3, 4, 5, 6 candles inside this box. One did break above, but it wicked out and ended up closing back inside. So we ignore the wick. I just look at the candle body. And we have this. Now, again, I don't know what direction this is going to break out. This could be, we could get a liquidity sweep, have this close higher and then drop off and continue this down move, or we could, maybe get, we had this big uptrend going here, but then, we kind of entered this bigger swings, at the top here. So again, I'm not necessarily biased to which direction it's going to go. You can see I have alert set at the top or bottom, top and bottom of this range. And then on the shorter one, on the 250, now we're over on the right. Here's that same range right here. Okay. And you can see right now it's still holding. We've had 2 attempts to go outside the range on this wick and this wick. So now I would probably just put my alert on the upside at above probably 120.30. So let me move this up, because that would accommodate. Actually, I don't really like that. I'm gonna leave it where it was. But anyways, you can kind of see, because I think that's too far away. But you can kind of see that this area over here is just more detail of this area. So I can quickly look through the charts, and I'm looking for something like this. And then I'll go to the shorter one. And now let's say it goes to the upside. Well, as soon as I get a candle to close above this wick right here, then, to me, that would be enough to take a long position, because it's already tried twice to break out of this range, keeps failing. So if we get, one and then probably a second one to close above here, that would be a good short. I mean, a long. And I don't need to put my stop loss way down the bottom, because I know some people say, well, you have a terrible risk to reward ratio because you'd have to put your stop at the bottom of this box. And no, you really don't. If this is going to go, it's going to go. I don't really need. So my stop would probably go honestly below this candle, like right here inside the box. And if this thing turns around and starts going lower again, obviously I don't want to be in it. I'm not waiting for it to get down here. I mean, to me, the trade would be long invalidated long before that. Okay. So that is the Aussie New Zealand. And so, like I said, I can go through these and see these on a lot of different charts. I mean, this one's kind of ugly. Pound, this, we already just looked at Aussie USD. Euro USD is one here, a little bit ugly, but you can see all of these candles are just trading inside this box right now. So again, I'm going to watch this. We were in a pretty steep downtrend here. So is it going to continue up or down? I have no idea, but I'm going to watch this. So that one is boxed. Pound USD, I'm actually already in the short. Now, this one was much smaller. You can see this was only a 3 candle box right here. Okay. Now, to me, it's got to be at least 3 candles. Okay. Although this one was 2. So, but I prefer to have it at least 3. But here, if we now look at the pound US dollar on the 250, okay, here's that same range. And you can see on the 250, it's not as easy to pick out, because technically this, this went up and then down. So this range is not like really perfect, right? Whereas this is easy, right? 1, 2, 3 candles, all the same size, all kind of very easily jumping off the chart and telling you that this is a consolidation zone. And then what do we get? This candle breaking to the downside. Okay. Now, this could ultimately be a liquidity sweep and we could go higher, but this is a full engulfing candle here. If there was any kind of a decent sized wick at the bottom here, even if it closed lower, I would not, I would not consider that valid. But to me, this is valid. Now, of course, it's Asian session. Nothing's really happening tonight, so I took that trade this afternoon after I did my video this afternoon, and it hasn't done anything. It's in a little bit of drawdown, like $40 or something. So we'll see how that one plays out. And if we just look here, couple of other pairs. Now here is one on the New Zealand USD. This is only a 2 candle setup. All right, so not ideal in terms of what I look for, but because I like to see at least 3, but we did have this 2 candle box right here. All right, and then price broke above right here. And again, you could use the shorter range bars to fine tune that entry a little bit, and that would be all good. All right. So we just keep looking here. I'm not going to have to necessarily go through every pair. Here's one right here, right? 4 candles set. Price breaks higher, and it does end up moving higher. There's actually, I mean, I guess you could consider this one, but this is not great because these are not all kind of lined up. This one here is good. 4 candles set. All right. Dollar Swiss. This one is good. I mean, it's a lot more volatile. I mean, this is on the 500, and look how much detail this is giving you, right? On the 250, it would really look crazy, but it is being contained inside of this. And this started on June the 18th, and this is so this range has been taking 1 full month to develop. Okay, so let's look at that on a regular candlestick chart. And yeah, that's dollar Swiss. So let's go to the dollar Swiss. We're looking over on the right now, and we're going to switch over to candlesticks. And this is the 4-hour chart. Now, look at this on the 4-hour chart, how messy this is. I mean, this is just, you can't tell me that this is as clean. I mean, we have all these fake breakouts. You could have gone long outside of here. You've been faked out. Then you had some liquidity sweeps at the bottom here. Okay, kind of got that right here too. Another fake long breakout. And then now, it looks like it's trying to break out again. But, we're going to fail again. I don't know. So just compare this month long on the 4-hour chart. Forget about a shorter time frame. This is the 4-hour chart, versus this, on the range bar chart. Now, if we look at this, let's look at it on the daily. It's still, you have these wild swings outside of the bar, especially this one, and we don't get that on the range chart. So even on the daily chart, it's not really that great. It's a little cleaner, but it's still not as clean as this. And you still get basically about 2 false breakouts here. I'll give the benefit of the doubt. There's no downside breakout if you have any trading sense at all, because you see you have 2 wicks poking through the range and then back in. So there would be no trade here anyways. All right. So that is the dollar Swiss. And we'll change that back to the 250 on the right. Whoops. No. I want the 250 on the right. Okay, this side. Okay. All right, so there's dollar Swiss. We'll scrunch that over again. Aussie CAD. Already looked at. That's ugly. Already looked at Aussie Yen. Aussie Kiwi we looked at. So, we don't necessarily have to sit here and go through every pair, but you can look back and see these really nice little zones. Here's one going way back in time here on the CAD Yen, right? This one right here. So if you're looking for places to enter or at least watch, these are nice little zones you can watch, okay? This one here is actually probably would have been a false break, potentially. This is just kind of some wild price action here, right? Ultimately, this did go up. So depending where your stop loss was, this could have been a good trade, but we whipped around, then we broke higher here, then we wicked, we came down, swept out liquidity, and then went higher. So this is just ugly, and unfortunately, this could have been a stop loss situation. This is might have been one you missed, depending on your stop loss. But so I'm showing you that because they're not always going to work out. And in the end, this actually would have worked out if you had gone long. It's just that in the real world, between the pressure of these three going against you and then this dip way below the zone, high chance you were stopped out if you were holding the trade through there. Okay. So let's be realistic sometimes too. All right. I don't necessarily see anything here that jumps out recently. Here's one here on the Euro Aussie 4 candle set. Price breaks higher, goes up quite a bit. How far did it go? We can measure it. Let's say we got in somewhere maybe halfway up this breakout candle. And if you took it all the way to the top, that's 215 pips in 6 days. Okay. And you could have just sat and held that for 200 plus pips. Okay. This one here on the Euro CAD, this is kind of like that. What was that? CAD yen. CAD can be really fickle. Went down here, broke, came down, swept liquidity, went higher. So if you survive this wick right here, that one turned out to be good. All right. Nothing jumps out to me right there. Here's a little one I had marked off before on Euro Kiwi. Okay. Ended up going down. Here's one here on the pound AUD, 3 candle set right here. Ended up going down. Nothing jumps out at me right there recently. We did have a couple little small, but these are not perfect. I don't know if I would have taken these. Pound New Zealand. Here's one here to the upside. Now, we did have a larger downtrend going, but, there was a temporary long position here if you decided to take it. We had one here. 1, 2, 3, 4, 6 candle set. New down move. Here's one here to the upside. 4 candle set. Breakout. Here's another one. Again, use your judgment on them. You don't take all of them. Like this one here, 4 candle set. Would I have taken this? No, because if you look to the left, we've got multiple highs sitting up here, and you can see prices rejecting off of there. Now, again, ultimately, this could turn and break higher, but this would not have been a trade I would have taken anyways. But the pattern is there, though. New Zealand yen. There is one here. It's a little ugly because of the wicks, but there's basically a 5 candle pattern right here. All the bodies of these candles are contained within this range. We did have a little wick pop here and a little green wick down here, but the candles are inside the range. And then we got this one right here, 3 candle set. Okay, breaks out, goes higher. Good trade back up to the old highs up here. There you go. So of all those I showed you, there's only maybe 2 of them that maybe would not have worked out just based on stop loss and those liquidity sweeps when price basically came back and retested the original zone. And then there was a couple I wouldn't have taken just based on where price was in the scheme of like major support or resistance levels. Okay. So you don't take them blindly. Just, look at where price is sitting. How much upside or downside potential does the chart have to move before you run into a previous level of support or resistance, like a major one, a major swing high or swing low, especially if it's an area where there's, prices hit that area many times and rejected, there's a good chance it will reject off it again. Doesn't mean it won't eventually blast through it, but it's kind of a management point. If you're in a trade and if you're thinking about getting in, you're really close to one of those levels, you might want to think twice about it. Okay. Is it really worth it? Call you have to make, right? So, all right. So, yeah, these are now my favorite patterns to find. And again, you can do this on any of these range bar time frames. Again, you guys know I like to hold my trades, so I don't scalp Forex. I do day trade futures, but I don't generally day trade Forex. I like to be able to hold my trades for at least a couple of days. Forex is just that kind of market where it can be really wild. It can be, pretty sharply manipulated. It can be a lot of weird stuff going on. And I just think if you go to the higher time frames, you're giving yourself more time to breathe and really analyze it, just make a decision. I mean, there's good and bad to anything. I mean, if you trade off higher, in this case, higher range bars, I don't want to say time frames because it's not a time frame, then potentially you could have a bigger stop loss and you may have to sit on capital, if your trade goes into some drawdown before it ultimately goes in your direction. So you can't tie up capital longer and have trades sitting out there that maybe aren't doing anything. But in the long run, I think it just makes for less, I don't want to say easy trading because trading's not easy, but uh more smooth trading. I don't know if that's even the right word, but hopefully you get what I'm saying. So that's why I love these range candles. And again, because I like to hold trades and trade a little bit slower than the 500 range is perfect for me. And again, 500 range means each one of these candles is 50 pips. Okay. In Forex, you have to move the decimal over one place to the left. So that means these are 50 pips. And then, like I was talking about, if you want to use the 250 to fine tune an entry or exit, I use the 250, which makes these candles 25 pips each. And of course, you can set it to whatever you want using the intervals, and you can create your own. I mean, some of these were pre-populated when I opened it, um, but you can use whatever you want. So, and again, I mean, if you wanted to trade this using shorter intervals, like you want to use 54, which would be 4.5 pips, you probably could do the same thing and look through here and try to find these candle sets. Like, I don't know, maybe there's one right here, where you can go back here and find those little two or more or three or more candle sets and trade that. I just don't even really see any too good on this pair anyways, but this is a really short range bar set, so it's not anything I'm really interested in. Okay, so I like to stick to the 500, and then I'll use the 250 to fine tune an entry if I want to. Because on the breakout, like on this breakout right here, for instance, on Aussie Canadian, again, you've got this breakout of this bar. Okay. But this can look up, this is 50 pips. I mean, they're all 50 pips, but this gets you a lot closer to this high. All right. So instead of that, if you say, okay, well, I see it looks like it's breaking out. So now if I look on Aussie CAD here, all right, where is that breakout? Oh, that's Kiwi yen. Got to go to that's Kiwi yen. All right. Yeah, here's that breakout right here on the 250 chart. So here you could get in at this candle right here. All right, you could get in at this candle, and if we line up the crosshair tool, that's around the 93.73 zone, okay, which is actually still almost inside of this range. And the reason why is because remember these don't paint on time; they paint on pips, okay, on ranges. And so this painted because it made 50 pips, okay. So this actually gets you in a little bit sooner, okay. So you can use the shorter range one to fine tune the entry, or if you don't want to do that, you can just stick to the higher one. You get in at the close of this candle and let it go. But in this case, like I said, you don't have a lot of overhead room. So, if you can fine tune an entry, why not, right? And get in a little quicker and your stop loss would still be reasonable. In this case, I'd probably would have put it back, below these candles, which is basically the bottom of this range in that case, and just, go for it right there. Okay. So that is how I use these. And honestly, that's becoming my favorite setup is using these little consolidation boxes. And they, you can see I went through all the pairs. They don't come along, really often. But the nice thing is they appear at the top and bottom of trends. So at reversal points, they can appear. And they also very commonly appear during pullbacks and market pauses. So if there's a trending market, especially, let's say you missed the beginning of it, like if you missed this one down here, okay, fine. I mean, you left 150 pips or so on the table here, but you had another chance right here to get this one. And, this went another one, two, three, four, five, another 250 pips. And, so you still had an opportunity to still make plenty of pips coming back to these old highs. All right. And that happened between July 13th and July 19th. So, you would have had to hold this trade for a week, but you made 250 pips on it. So like I said, these are not necessarily happening overnight, but you just sit on them and wait and let them play out and just play out the averages. And as long as these are going in your direction and the market structure hasn't changed, then you just hold them until, you know, you feel like the price is burning out or getting to a major swing point, and then you exit your trade. In this case, this is an obvious place to exit, is somewhere up here, between the, this body and the top of this wick. I don't know. I mean, this happened to go right to the top of the wick. Actually, probably missed it by maybe 1 pip. So I don't know if I would have been that greedy to squeeze out all that, but I may have just closed it at the top, at the body of this candle. But it did go, another 25 pips or so higher. But do I want to risk giving back 250 pips to make another 25? No, I don't. Not me. So, yeah, so I hope that makes sense. So, anyways, guys, yeah, I'm going to leave it there. Um, I hope that was helpful. So check these out. If you're not using range bars, if you have Trading View, check it out. Use the range bars. Play around with, depending, like I said, how often you like to trade, how long you like to hold your trades. That's going to determine the range interval you use. Again, if you're more of a swing trader, you like to hold your trades for a while, you want to look at higher numbers like a 250 range or higher, especially in Forex. As you can see, I'm using 500 and 250. But if you are trading on shorter time periods, you don't like to hold trades, you're day trading or scalping, then you need to go way down. You need to go down to like, 20, 20 or less if you're scalping, and probably, maybe 50 or so if you're day trading. So just, ballparking it. So, all right. So I hope that was helpful. Make sure you smash the like button, subscribe to the channel, and I will be back tomorrow. I'm going to continue to do some of these live streams. I really need to schedule them though, so that I'm getting some more people to, kind of hit the notification button and get ready for, instead of just going live and expecting people to jump in. I know that's asking a lot, if people aren't like just hanging on their computer. So, but anyways, if you're enjoying these, make sure you smash the like button, drop a comment, and I will talk to you all soon. Have a fantastic evening.